Apple might be short 6 million iPhones this quarter. Coming up here on The Job. Hi folks, Alex Klingelhoeffer here, Exencial Wealth Advisors. It is 9:05 here in the middle part of the country on Monday. Happy Cyber Monday to you. It is November 28th, 2022. Here's your morning jog around the economic headlines of the world. I want to start off with Cyber Monday and some analytics from Adobe, which suggests that this Cyber Monday could set a new record, $11.2 billion spent on shopping. Now, something that's interesting to me, let's look at Black Friday. About $9 billion online spent shopping. This comes after I was told, again, for weeks and weeks and weeks, that this was going to be a very slow holiday season, that folks had no money to spend. Record Friday sales, record Cyber Monday sales. This looks to be very good news for an economy that just wants to go in recession. And higher interest rates are causing this, right? It's causing housing to not do so well. It's causing interest rate sensitive industries to not do as well. But overall, the American consumer, guess what? Strong as ever. No kidding. Apple, let's talk about some products folks might be buying for their loved ones this holiday season. iPhone Pros in China, Foxconn factory having huge demonstrations, boycotts, etc. Really nasty stuff going on at Foxconn, and good for those folks. If they're not being treated well, they deserve to have their voices heard. Now, that's not typically as effective in China as it is here in the US. We'll have to see how it ends up. Ultimately, looks like Apple might be short 6 million iPhone Pro units. That would cause a substantial hit to both their top and bottom line numbers. Over the next few weeks, what will happen? Like, if these protests continue and we don't see numbers coming out of the factories in China, it only gives Apple additional incentives to keep making additional iPhones in India, where they are relocating a lot of their production. Last but not least, before we get you off to a nice post-Thanksgiving week, let's talk a little about oil as it continues to free fall. It's now below where it started in 2022. Brent somewhere around $80 a barrel. Now, listen, folks. Things in sort of the energy space have not gotten materially better this entire year. If we're talking about, hey, additional production hasn't been much coming online. You have European sanctions against Russia that are slated to go on December 5th. That, at a very conservative estimate, is going to take about 500,000 barrels out of the pool. You've got OPEC cuts for 2 million barrels. I just don't see how energy goes a ton lower from here. And we're looking at energy stocks getting hammered as well. Listen, if the floor for oil is $70 or $80, that is incredibly supportive of long-term equity prices for energy stocks, right? We're not talking about these companies losing money anymore. In fact, there's substantial free cash flow that's not baked into those projections. Do your research, take a look, model it out. It's just beginning a new era of energy when we look at some of these names and no longer pricing in huge hits to their pricing. If $70 or $80 is kind of the floor here, that makes sense for a long-term investment. If you want some additional info throughout the week, feel free to find me on the internet. I am out there. Till then, you, your family, hope you have a really good rest of your Monday. I'm out.